Thank you, Madam Co-Lead, and congratulations on this first draft. I'm speaking on behalf of Public Services International, representing around 30 million workers in more than 150 countries, and also the International Trade Union Confederation, representing around 200 million workers in 170 countries and territories in both Global South and Global North. I also represent Public Services International on the Civil Society Council of the Regional Platform for Tax Cooperation for Latin America and the Caribbean, the PETELAC. So our first concern on Article 9 relates to the possibility of choosing the taxation method. Taxpayers should not have unrestricted discretion to choose the method that applies. In particular, if a net method is available, it must address the limitations of existing transfer pricing rules. Otherwise, multinational enterprises will continue to allocate profits to jurisdictions of their choice rather than where the economic activity actually occurs. A recent published IMF paper indicates that a larger share of cross-border services take place within multinational groups, with country figures indicating that such is the case for around half of digitally delivered services. We strongly support a net taxation mechanism, but one linked explicitly to a formulaic or fractional approach to profit allocation, and with a precise definition of reasonable allocation of profits that considers relevant economic presence, source, and market countries, and not merely physical presence. Also, we agree with previous interventions regarding the definition of enterprise, and we would call for member states to refer explicitly to multinational groups as unitary entities. In addition, we should not reproduce under a multilateral instrument the imbalances that have characterized for years trade and investment agreements. In this sense, we have a concern with the proposed non-discrimination principle, particularly the idea that cross-border service providers should not be treated less favorably than domestic ones. This could constrain legitimate difference in the taxation of foreign and domestic companies, including measures designed rightfully to protect the domestic tax base, such as limitations on interest deductions or different treatments for dividends. This is particularly important for the Global South countries, which have faced decades of structural inequality, resource and value extraction, tax avoidance, and illicit financial flows. Taxation must therefore remain not only a revenue-raising instrument, but also a legitimate tool of economic and industrial policies. With that, we call for the member states to ensure that this protocol preserves sufficient policy space for developing countries, with meaningful taxation at source and in market, appropriate nexus rules, and a fair allocation for taxing rights. So thank you, Madam Khalid.